We're in the thick of earnings season, so some more earnings to address at this juncture. We have Embassy Office Parks. They've had a robust Q2. Occupancy rates also inched closer to 95%. And stellar occupancy rates, whether they are not sustainable or not, we have to find out from the management. Mike Holland, CEO of Embassy Office Parks, is joining us on the show. Mike, hi. Thank you so much for coming on ET Now. You've witnessed a good uptick as far as occupancy rates are concerned. Rates are trending closer to 95 mark. Can this uptrend be sustained? That's the big question.
So we reported that our occupancy is at 94.7%, that it's up 100 bips year on year. And of course, we're very pleased with that. However, if you look back over the last 4 years, our occupancy levels have always been in that 93 to 95% level. We run a highly occupied portfolio. Our existing tenants like to do more business with us. The majority of our leasing comes from those existing tenants as they grow. And so the numbers that we reported this quarter are in fact simply a continuation of our performance over the last 4 to 5 years in terms of occupancy. And of course, the market and the demand for office space continues to be strong. I think at the end of the third quarter, the overall market across India in terms of absorption crossed 47 million square feet, which is more than the whole of 2018. And that's in the first 3 quarters of this year. So demand is very strong. Our occupancy levels are very high. And we see that as business as usual for us.
What kind of yield would you be looking at given right portfolio is quite stable at a close to 95% like I flagged off? How much is it of it committed to occupancy? What kind of occupancy rates are you witnessing currently? If you could shed some light on that.
Our occupancy rate across the portfolio, clearly it varies property by property, and we're in 4 different cities. But aggregated together, that's that 94.7%. And we aim to maintain those high levels of occupancy in the portfolio. You know, example is last quarter we reported that we had 500,000 square feet of potential leasing pipeline. And then this quarter, we reported that we'd actually converted that and we'd closed on 595,000 square feet of new leasing. So we closed with 10 different occupiers on leases that was more than our pipeline at the end of Q1. At this point, we've leased up 23% of the new buildings that are coming on stream. We've got 1.4 million square feet.
Operational results seem strong with releasing at strong spreads. However, can you give us a glimpse of releasing trends across the various properties, and strong absorption trends and tight vacancies also suggest that the rental uptrend could continue. Do you agree to that view?
The rental upticks, you know, we see different growth rates in different markets, and those variations will continue. But what we're seeing, particularly in our large centres of Pune and Bangalore, we continue to see 5% or sub 5% vacancy in those markets. We continue to see rental growth of between 6 to 7%. Frankly, with the demand that's out there in the market and the limited supply and an overall trend in the market towards larger, more institutional type of landlords, we continue to be positive about the future, both in terms of demand and rental growth.
One area of key concerns highlighted by analysts is the slower ramp-up of Embassy One and Four Seasons Hotel as well. Does this concern you, and how will you look at these crucial assets going forward?
So Embassy One and the Four Seasons Hotel, that's part of that integrated development, that went live in May of this year. It's an absolutely super premium asset. The hotel is one of the best quality hotels in the country. It's very well located in relation to the city and the airport. And we're seeing a significant improvement particularly post-Diwali. But these types of properties do take some time to reach stabilization, but we're absolutely confident. It's got great conferencing facilities. It's a great hotel property. So we'll see that ramp up over the next few quarters. With regards to the office, it's a smaller scale front.
Can you take us through the entire ROFO, which is ROFO, received for Tech Village asset? What is the process? Give us a sense of the timelines. How is it a good fit in your asset base?
Yeah, well, we were very excited to receive the ROFO notice on Monday of this week. The ROFO notice relates to a portion of Embassy Tech Village, which is on the east side of Bangalore, right in the heart of the technology corridor. 6.2 million square feet of completed and operational space, and I think 2.4 million square feet of potential development premises. So that's a great asset to be looking at as our first potential ROFO. The process you asked about, so the notice that we received from a number of the shareholders of that asset through Embassy Sponsor.
All right, Mike, great chatting with you. Thank you once again for speaking to ET Now and shedding light on what transpired in the quarter gone by and what is the outlook ahead.